People often think about diversifying their portfolio with gold, and it is a great investment option. But when you start looking, you might realize there are a few different ways to invest in gold too. There's physical gold, which is called bullion, but investing in stocks called gold stocks will also give you exposure to the price of the metal. Here are 4 different portfolio options. They all have benefits and drawbacks that make them more or less suitable for various use cases, so it's up to the user to decide which one is the best for their own personal needs. Gold stocks versus physical gold. With gold stocks, you're investing in companies who mine or own gold, and function like other stocks. Physical gold is actually gold coins or bars that you yourself own and have to store in an IRA-approved account. But, there's factors to consider when you decide to invest in gold stocks, or physical gold. Consider things like your starting capital, and investment goals. Let's explore the differences between gold stocks and physical gold. Before we continue, please give this video a thumbs up and subscribe to my channel. Gold stocks, also known as paper gold. Gold stocks work the same way as any other stocks you can buy. You invest in a company and trust it will grow. When investing in gold stocks, you're essentially investing in companies that are specifically tied to gold. In theory, your investment should mimic the price of gold, and not the stock market. Types of gold stocks. Gold ETFs. ETF stands for Exchange Traded Fund. When you invest in gold ETF, you are investing in assets that's backed by gold. You don't own any physical gold. This would be a great option for you, if you want to invest in gold that mimics the price of gold, without actually owning physical gold, and having the need for an IRA-approved account. Gold mining stocks. Gold mining stocks are investing in companies that mine gold. Although they often follow the price of gold, these stocks are subject to fluctuations in the business itself. Factors like how the business is managed, the country's stability, success of mining operations, and workforce issues, may all impact your investment negatively. Gold certificates. Gold certificates represent an investment in gold. You receive a certificate that indicates you own a specified amount of gold, that's not physically in your possession. Since the US dollar is no longer backed by gold, these certificates are less popular. Just know that if the company that issued the certificate goes belly up, your certificate wouldn't be worth the paper it's printed on. Pros of gold stocks. It can be liquidated easily. These investments function like traditional stocks, you can just easily trade the stock. You don't have to wait to withdraw it from your precious metals IRA in order to sell it. Don't need to store it. With physical gold, it's imperative that you store it with a precious metals IRA for it to be recognized. With stocks, there are considerably less considerations. You can just hold it in your investment portfolio. You don't need to insure it. Because physical gold can be physically stolen, you need to insure it. Whereas gold stocks do not carry that risk, and buying insurance for stocks is uncommon. Cons of gold stocks. You don't actually own any gold. Your investment is in a company that is specifically tied to gold, not in the commodity. You won't have physical gold to use as currency in an economic crisis. Technically, you do not own any gold, and if a market crash occurs, there is no safeguard for your investment. It's a higher risk investment. Investing in gold stocks is risky, because they depend on more than just the price of gold. In other words, since you're investing in a company that produces gold, and not just gold itself, the success of your investment depends on the success of that company. If the workforce go on strike, poor management of the company, or the mine does not produce gold, then your investment may be at risk. More affected by stock market. Physical gold often goes up in value during times when the stock market is struggling, but that is not true of gold stocks. This is because it's tied to the stock index, individual companies, and other risks, which make it a less stable investment choice. Physical gold. When investing in physical gold, you actually own bars and coins that are approved by the IRS for a gold IRA. Types of physical gold. Gold bars. There are two kinds of gold bars, cast and minted. Cast bars are made in a mold, while minted bars are poured into a long strip of metal, and then cut into individual bars. Cast bars tend to be rougher and less perfect than minted gold, which is nearly perfectly shiny and smooth. Minted bars are preserved in their original packaging, in order to keep their appearance and value. Coins. Gold coins are produced by various mints around the world, and they often have a face value. However, the gold itself is often of much greater value than the face value. Gold coins minted before 1933 in the US, also have additional historical value. Pros of physical gold. You directly own it. Unlike gold stocks, you actually own the physical gold bullion. Gold prices won't fluctuate as much as an investment in the stock market. The gold you have in your possession will retain its inherent commodity value. Price often goes up in economic downturns. When the securities market is in a recession, or the economy is plummeting, the value of gold often increases, making it a good complementary asset to other investments. Additionally, gold is generally a stable investment because it increases in value over the long run. Can be used in economic crisis. In the event of a currency crash, or apocalyptic event where paper money becomes invaluable, gold is used as currency to trade for items. And, because you have the physical gold in your possession, you'll be able to easily use it to trade for goods. The cons of physical gold. You have to use a custodian-monitored IRA. The IRS doesn't allow for you to store your gold IRA in your home in any way. For the IRS to recognize it to be legitimate, you need to place it into a certified IRA and have a custodian to oversee your account. When you open an account, there will be a fee payable, as well as a yearly fee for this service. Can only invest in IRS-approved bullion. When you buy bullion to add to your IRA, it must be one that is approved by the IRS. If you're buying gold from a non-reputable dealer or a second-party site such as eBay, always verify that your purchase is 100% eligible for an IRA before making the purchase. So, should you invest in gold stocks or physical gold? As mentioned, it depends on your investment goals and starting capital. This is a personal choice that only you can make. Carefully consider each with their pros and cons. If you're not sure, talk to your financial advisor. Thank you for watching. See you in the next video.